Good morning, everyone, and welcome to another edition of Bleeding Crypto's 15-minute market update. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Today is Monday, August 5th, 7:22 a.m. local time. And I just want to start off by protecting myself legally. So let me give you my disclaimer. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you follow me and you use real money, you have a 99.9% chance of losing it all. This is for entertainment purposes only. This is to be considered game theory for your fantasy paper trading. All right, guys. So let's go ahead and get started with Bitcoin. I'm going to use this chart because I've been posting this chart over the weekend as a possibility of hitting the target, which was I had an X on it. I just removed the X just to give it a little bit more, less crowded on my chart. The X was here, and we came down and touched it. Now, you guys know, and I'm going to repeat it again. Most of you guys know my system, backbone of my system, the confirmation I look for is back testing. Back testing, back testing. Beautiful example of resistance. 1, 2, 3, 4 touches. We broke above it, never back tested, came back and we back tested. And look how high it needed to go. And eventually we come down and we back test this. And I think by now, after about a month of me doing these videos consistently, you can see I show it to you guys in any time frame, every single video, the same thing. It's always back testing. The confirmation comes from that back testing. So did it back test it absolutely perfect? No. But if we back tested it, we went a little bit further. Now look, we're wicking up. Does this mean this is the bottom? I don't know. And I don't care. Because here's the thing. If you try to guess where the bottom is, most likely you're going to get it wrong. And you're not going to know where it is. So have a plan for either direction. And the way I do it is by, now that I look at the macro view, I look at the low time frame. The low time frames will give me now the map out for my next move. And let me show you what I'm looking for next. First thing we're going to do is stay in the macro view to basically look for the next area of support, because we are in a free fall. The markets around us, broader markets, they are collapsing. They are dropping in rates that we haven't seen, in percentage we haven't seen in a very long time. Okay, so we have to take that into account. That's going to affect crypto as well. So we got to see if we're going to continue to come down. Where is our next area of major support? So what I'm going to go to the weekly and I'm going to look left. Real simple. Keep it really, really simple. Left gives me this area here. And I'm actually going to do it in a box. Right here. Right here to right there. That area, this box is $44,000 box, is where I'm looking for the next area of support if we cannot maintain this as support. All right. That's an if we cannot. Now, I'm going to do something here. I want to show you guys something that's really important to me is this right here. The weekly EMA, the weekly 50 EMA. Let me show you why. Man, I'm going to have too many lines together. Shoot. Hold on. Let me see something, guys. All right, I'll just do this here. 50 EMA weekly, and I'm gonna do this white because this line is white, but I hate that we have another white line above it. I'm gonna put this in yellow just so it can stand out, just so it doesn't get confusing. So let me do this real quick. Let me just zoom in here, make sure I got it right on that line. Yep, it's right on the line. Okay, perfect. So now what I'm going to do is I'm going to go to the lower time frames, and I want to show you an example of what. So this yellow line is the 50 EMA on the weekly time frame. And I want you to see something. We came to it as support. We held it, we held it, we held it. Then we dropped below it. Look, we dropped below it here. We held this white line is actually a support and resistance that I had previously on my chart. But we came down and we lost the 50. Look what we did. Back tested, back tested, back tested, back tested, rejection. However, you guys should know by now, another thing that I look for quite often is these W's, these double bottoms. There it is right there. We have it here. So I cannot throw my system out the window because of all the fear going on out in the world. Now, can that affect my setup? Absolutely it can. But I got to stick to my rule set because without my rule set, I don't have a consistent marker to base my trades off of. If you're going to flip flop and change systems, you're not going to be consistent and you're not going to be profitable in the long term. Are we going to have losses? Absolutely, we're going to have losses. But the losses will increase if you don't keep a consistency across the board in how you measure and how you look at the market. So for right now, I got to treat everything as if I drown out the noise from the outside, and I got to look for those invalidations and validations like I tell you guys every single day. Well, not every single day, but five, 6 times out of the week. So now that I know that this is the main marker I'm looking at, the 50 EMA for me right now is the only marker I'm looking at. It's where I'm going to base my next trade. Am I going to go short or am I going to go long? Well, this is going to tell me. If we climb above it here and we back test it and we hold it and we start climbing higher, that's an obvious trade. If we continue to break down, that's an obvious trade. Well, what's the invalidation? You can go into a short position, or better say, you can go into a long. Everybody's bullish, right? Everybody wants to go up. All right, you can go into a long position. It rolls over, it breaks to the 50 EMA, it comes back down, and then back tests like it did here. You have an easy invalidation. You're taking the trade off of this line. So basically, this goes up here, this comes back down. You take your trade there. You say you take a long, and you're wrong, and it comes back down, and it back tests. You're back at 0. And it doesn't break above. It starts to break down. The loss is very, very minimal. But you have to have a baseline. And these baselines, very rarely have a baseline this good, this clean. Not that support and resistance isn't a good baseline, but a 50 EMA on the weekly time frame, that is just that's just the icing on the cake. Icing on the cake. Now you can even go do it even further by looking at the smaller time frames, how I normally do it on a smaller time frame, just to give me a quicker confirmation. But in any case, this is more about where we're headed, what I'm looking for. Now, I gave you the scenario to the downside. Okay, here's the scenario to the downside. Now, here's something that I have to consider. Every outlet out there is talking about how bad it's going to be today, including myself. I think it's going to be terrible. I think we have a better chance of dropping than going up. However, if everyone has that mindset, and we have on high block alone $32 billion in short accumulative contracts pointing to the downside, do you think the market makers are gonna just give up and pay everybody? It's unlikely, because those same contracts could be used as fuel for a push higher and liquidate them. All they have to do is get the ball rolling, start liquidating some of those contracts, and start using those profits and pushing the price higher, causing a cascade of liquidation. Like they cause a cascade of liquidations to the downside, they can do the same thing to the upside. So I have to think, besides just the TA, strategically, how would the market benefit the most? How would the market makers, better said, benefit the most in a situation like this? If I was a market maker, I'd want to push it up. Well, if I push it up, again, I can't just guess on where they're going to do it. I have to do it calculated, because we're trading against algorithms, AI algorithms that use math. And that's what Fibonacci retracements are. Now, this is already on my chart, so I'm going to leave it here. Basically, this is the swing high to the swing low, and we're using the continuation rule, which is the lower high, not the whole, a continuation rule to the downside. A lower high rule is usually a little bit higher. However, I'm also going to consider the state of things and where we're at. I think I'd be a little too optimistic trying to use a lower high rule, which is this. That to me is a little too high. So I'm going to be reasonable because of the circumstance that we're in, because of the global economy, the global state that we're in right now. So I'm going to get a little less greedy, and I'm going to say, you know what? Can you at least give me a 382.50? That's being reasonable. That's not being too greedy. And if we're going to go higher, then great. But even this may be too much. But I don't know, because I don't control the markets. But at least I have a base. I have a baseline here. Now I also need a target To me, this would be a reasonable target to start scaling out. Remove your stop loss as it goes up. When you hit some of these markets, maybe 25%, take another 25% here, or take the whole thing here and then wait, see what kind of reaction. If it flips this into support, you can get back into your trade and see if it goes into the lower high rule, which is a little bit higher. But for right now, I have to think smaller. I got to think less. I have to think, okay, where can we... Actually, this wasn't the chart that I was using. Sorry. Well, this was a chart that I used before. When I started the video, I was on this chart here. But this chart just shows it a little bit clearer, a little cleaner. So this is what I'm looking for today. Not crazy, not back up to the high. We're not going to, very unlikely, we're going to V-shape back to all time. Guys, you have to be realistic. All right? As an analyst, we don't look for V-shapes up to all-time highs, go up $30,000 in one day. That's not the probability. The probability is, you know what? Say we don't make it up here, but we do this. We come down here, but yet we hold the bottom. We hold this low, this swing low, and we start putting in bullish market structures. It starts to develop a story. Hey, you know what? This may be the bottom. I don't know that. Nobody knows that until we have the data that comes in. The only data that I have at the moment that I can utilize to my advantage is this data. That's it. And I'm okay because I'm a day trader. So that's all the data I need. Show me which direction I can go today. And you know what may even happen? I may get chopped a little bit in here. And then I have to decide, okay, you know what? I'm going to wait for a higher target to break. I need to break this line or I need to break this line. And then I'll take it. Right now, I'm taking my trade based on what happens here. I might have to adjust that, and that's okay. But I need a baseline. And based on that is how I'm going to call my next trade out for my Telegram group. Again, guys, you don't have to learn this. You want this information? 88 cents a day, $25 a month. Sign up, and you have me all day, 7 days a week, looking at the markets for setups, taking setups. Are they always going to be right? No. We manage the leverage. We manage the risk. We get out. We cut them when we need to get out. We find the quick invalidations, and we continue to go. One gentleman shared with me the other day. It's really cool to see this. 132% ROI in the past month. 132%. He was able to increase his portfolio, following the rules, taking the trades, knowing that, including the losses. He showed me a screenshot of the portfolio. 132 point something, and it wasn't a different language, but you can make out it said 7 day, 30 day, 6 month. It was just written differently because it wasn't in English, but you can see what it was. It had the positive, the numbers were positive, but the actual writing itself. I asked for permission. I don't want to just post it without asking for his permission. I asked his permission if I can post it, so I'll probably post it this week. But it's nice to see that, you follow the rules. You're going to have losses, but you can still help people to increase their portfolio, which is it's a good feeling. It's a good feeling. Now, again, guys, I do not allow anyone to go in. All right. I've had people that I've turned down, and usually people, when I have a conversation with them, you can tell right away, guys. You can tell the level of intelligence if they're going to be able to follow the instructions. And I can't tell you how many conversations I've had with people where I'm just like, oh my God, just stay out. I don't want you here. I literally tell them that. I don't want you I don't want you here. You don't have what it takes. And it usually is that. It takes a simple conversation to know who's going to make it and who's not going to make it. It's terrifying. It's terrifying, the amount of people that can't comprehend something. And you think, to me, this is really complicated. TA is complicating. Learning how to trade is complicated. And you can't follow a simple little instruction. How the hell are you ever going to follow something as complicated as this? But in any case, I just had to share that because it baffles me. It baffles me the amount of ignorance that's out there, and they want to be traders. But in any case, I make it easy. I tell you where to buy, where to sell. You just have to know that. You have to know that. You have to know how to just be able to fill out a form and on your fantasy paper trading and see if it works out for you. Today we're going to wait to see what happens around the 50 EMA. That's all we can do. All we can do is wait to see what happens here, and then hopefully we'll start seeing a follow through. But the best case scenario for me that I'm looking at for the foreseeable future is this right here. I just, even if, I don't even know if we're going to get here. This may be too optimistic, but I got to have a baseline. I got to know a measured move that we normally make, at least start with that. Because as you all know, when we drop, when we have a high, when we have a low, we look for a lower high. And this is not a lower high rule. This is a lower high rule. This right here. 618 would be at 62,000. But do you think we're going to climb that much? I don't think we're going to climb that much. Maybe I'm just being too pessimistic. But I feel like I'm being a little bit more realistic in not looking for something like this and being more conservative. Just being a little bit more conservative and say, okay, you know what? And even this may be a stretch, but at least I'm meeting it halfway. I'm not being too optimistic, but I'm not being too bearish. Oh, we're never gonna come back up. But we're gonna go to 10,000. No, I don't want to be that extreme either. I think I've got a reasonable target to the downside based on good data, based on good area of prior resistance. Usually is support. Even on the lower time frames. Look at this. Look at this. When we broke above it, look where support was. Look. See? So I'm not being unrealistic with this target as my next target. Now, if we break below it, same thing. We start over again. Okay, where's the next level of support below that? I'm not even going to entertain that because, again, you need to invalidate the current situation before you can start talking about the next target and the next target. No. 2 targets I'm looking for today, for this week, not today, this week. Here or here. Tomorrow, be a new day, new data, 24 hourly candles would have come in, and then we'll analyze what those 24 hours did for the price action. Did we put up a market structure or did we just go sideways for an entire day? That isn't bad either. When we go sideways for that means the market is cooling off. Now, the market could be cooling off for its next move down, so it can mean either way, but at least there's a cool off period. Okay? And then based on that cool off period, those small directions become a lot more meaningful. So when you have a tight consolidation and it starts moving, trickling up, that's a clue. That's a clue that we maybe start heading a little bit more to the upside, and we have reasonable targets to look for. So tomorrow, guys, I'll do another video, same time. Let's see where we went. Let's see where we go, and we'll take it from there, guys. All right? Market is dangerous. Be very careful. Be careful with your alts. Alts bleed a lot more than Bitcoin. Just look at the examples that I put on some. Look at this example right here. I don't know if the guy who who told me when I posted this on Friday, he told me I was smoking something because we were up here. We were up here, and he said, "BC, you're smoking." We hit 593. I don't know if he's listening to this video, and he's probably going to be deleting that. I took a screenshot, so if he deletes it, I'm going to call him out. If he deletes it, I will call him out because I took a screenshot. Because I love when people tell me I'm smoking something. When the TA is a TA. It's the hopium boys that always think that you're smoking and that you're crazy or you don't know what you're talking about. And then when it happens, they go real quiet. They go real quiet. It's just, it's a normal day in the office. Normal day in the office. But a lot of these coins, look, here's another one that I posted on Friday. Check this out. Was it CAT? Maybe it was KuCoin. Here it is. Look. We were here. That's why the arrow started here. We were right here, guys, on Friday. Go look at my timeline. Look where we went. Right to 786. Why exactly there? Because the algorithms the AI algorithms that we trade against are all programmed mathematically. You're not trading against some old guy with glasses and a pocket protector. You're trading against supercomputers who the only language they know is math. All right? So don't discount some of these targets when I post them because they're not my targets. They're given to me by measuring the mathematical equations that I do. Look, and I even put this as an example. Mathematical equation for retracements. Look, they all go right into this box. Look where we went. Right into it. It's not about predicting or having a crystal ball. It's about just understanding the math. That's it. You understand the math doesn't lie. All right? So, and there's many examples like this of what I posted. but I want you guys to see how efficient these algorithms are. All right, guys, everyone have a really good day tomorrow. Let's see where we get with Bitcoin. What have we done? What did we do here on the smaller time frames when it comes to this here? Did we break to the upside? Did we go to the downside? It's going to be exciting to know. I don't know, but it's going to be fun to see which way we decided, the market makers decided to take it, and what kind of setup that we get in front of. All right, guys, everyone have a really good day, and I'll talk to you guys later.